Chevron Corporation, headquartered in the United States, is a leading multinational energy company with a broad presence across the oil and gas sector. The company's operations span the entire energy value chain, including the exploration and production of oil and natural gas, refining crude oil into various fuels and products, and marketing and distributing these products globally. Chevron also actively invests in renewable energy sources, reflecting its commitment to diversifying its energy portfolio. Chevron's core business include exploration and production. Chevron is involved in discovering and extracting oil and natural gas worldwide. For example, Chevron has significant production activities in the Permian Basin in the United States and offshore projects in Angola and Australia. Refining and marketing. The company refines crude oil into fuels like gasoline, diesel, and jet fuel and sells these products through a vast network of retail outlets. An example of this is Chevron's refinery in Pascagoula, Mississippi, one of the largest in the U.S. Chemicals. Chevron also manufactures and sells a range of chemical products. This includes the production of lubricants and petrochemicals used in various industries, supported by joint ventures like Chevron Phillips Chemical Company. Chevron's strengths include global operations. Chevron has an extensive global footprint, operating in over 180 countries. This diversified presence helps mitigate region-specific risks and capitalize on global market opportunities. For example, Chevron's Gorgon project in Australia is one of the world's largest natural gas projects. Financial strength. Chevron boasts strong financial performance, generating substantial revenues that allow it to invest in large-scale projects. In 2022, Chevron reported a net income of over $35 billion, demonstrating its financial resilience. Technological expertise. The company is known for its advanced technologies in exploration, production, and refining. Chevron's use of digital technology in predictive maintenance for its machinery has led to significant cost savings and operational efficiency. Resource base. Chevron's large and diverse resource reserves, such as its holdings in the Tengiz field in Kazakhstan, provide the company with stability and growth potential, ensuring a steady supply to meet global energy demands. Chevron's weaknesses include oil price dependency. Chevron's profitability is heavily influenced by fluctuating oil prices. During the 2014-2016 oil price slump, Chevron had to scale back several projects and reduce capital expenditure due to reduced revenues. Environmental concerns. Chevron faces increasing scrutiny regarding its environmental impact. For instance, the company has been involved in long-running legal battles over environmental damage in Ecuador, which has tarnished its reputation and led to significant legal costs. High capital expenditure. The company requires substantial investments for its operations. Chevron's ongoing investment in the Tengiz oil project in Kazakhstan, which is expected to cost over $45 billion, exemplifies the high financial commitment needed for such large-scale projects. Chevron's opportunities include renewable energy investments. Chevron is expanding into renewable energy. The company's recent investments in biofuels, including a partnership with Brightmark to produce renewable natural gas from dairy farm waste, highlight its efforts to align with global sustainability trends. Technological innovations. Chevron's advancements in technology, such as the development of the Chevron well control system, improve drilling safety and efficiency, reducing costs and enhancing operational effectiveness. Emerging markets. Expanding into regions with growing energy demands like Southeast Asia and Africa present significant growth opportunities for Chevron. The company's recent entry into the South African market for liquefied natural gas is an example of this strategic move. Chevron's threats include volatile oil prices. The company's revenue is vulnerable to fluctuations in oil and gas prices. The 2020 oil price crash, driven by the COVID-19 pandemic, forced Chevron to reassess its investment strategies and reduce capital expenditure. Regulatory risks. Increasing environmental regulations and compliance requirements, such as those under the Paris Agreement, can raise operational costs and require substantial adjustments in Chevron's business practices. Energy transition. The global shift towards renewable energy and electric vehicles poses long-term challenges to Chevron's traditional oil and gas business. The growing adoption of EVs, supported by government policies in countries like Norway and China, threatens the future demand for petroleum products. Conclusion. Include Chevron's extensive global presence, robust financial strength, and technological expertise provide a solid foundation for its operations. To maintain its competitive edge, Chevron should continue to invest in renewable energy projects, leverage technological innovations to enhance efficiency and reduce environmental impact, and develop strategies to manage the risks associated with oil price volatility and regulatory pressures. By proactively adapting to the evolving energy landscape, Chevron can sustain its leadership position in the industry.